Listen closely, because in the next few minutes, you're going to discover the one invisible force that's been sabotaging your trades long before your entries, your indicators, or your strategy ever had a chance to work. And once you understand it, you'll never look at the charts the same way again. Let me ask you something straight up. Comment below, when was the last trade you took just because you needed to be right? Not because it fit your plan, not because it was part of your system, but because something inside you whispered, prove it, don't back down now. If that sounds familiar, then you're in the right place. Welcome to the inner war of trading, the battlefield nobody talks about, the one every trader experiences, and the one few ever master. And you're here because a part of you is tired of the chaos, tired of feeling like your emotions are steering your account more than your skill, tired of knowing you're smart enough to win, yet still losing to something you can't quite see. You came for consistency. You came for clarity. You came because you're sick of asking yourself, why did I do that again after the damage is already done? And that's exactly what this chapter is for. Right now, we're stepping into the truth behind trading bias, this invisible, silent shapeshifter inside your thinking that's been guiding your decisions without your permission. Bias is not just a mental mistake, it's a hidden operating system running underneath your strategy. And if you don't understand how it works, you can't control anything else. By the end of this chapter, you'll understand something most traders never even consider, that the biggest threat to your account isn't the market, it's the stories your mind creates inside the market. So let me show you what you're really fighting. Bias shows up when you cling to a losing trade because it can't go lower. Bias shows up when you double down after a win because you suddenly feel invincible. Bias shows up when you think the market owes you a reversal. Bias shows up when you ignore risk because you saw one person get rich on a meme coin. And here's the twist almost nobody realizes. Bias doesn't care how smart you are. In fact, the smarter you are, the deeper the trap. Ever wonder why brilliant traders blow up accounts just as often as beginners? It's because intelligence doesn't cancel emotion. Intelligence amplifies emotion. The better your brain is at creating ideas, the better it becomes at creating excuses. That's why emotional neutrality is the foundation of fearlessness. It's not about being cold, it's about being clear. Fearless execution isn't about having no fear, it's about not letting fear vote. And that professional trader mindset you want? It's built on one simple truth. You must learn to see the market without the lens of personal meaning. Not, what does this trade mean about me? Not, this trade will fix everything. Not, I can't lose again. Just probability, just structure, just process. Let me tell you a quick story. Years ago, a young trader asked Paul Tudor Jones what separated legendary traders from the rest. Jones didn't talk about indicators or setups or secret strategies. He simply said, the key is to play great defense. Think about that. One of the greatest traders alive told the truth nobody wants to hear. Winning isn't the hard part. Protecting yourself from your own impulses is. And that's exactly what mastering trading bias gives you, a clear path to consistency. Not big wins, not quick wins, but emotionally clean decisions. Because here's the fact most traders learn too late. You don't rise to the level of your strategy, you fall to the level of your psychology. Let me ask you something that might sting a little. If I showed you a replay of your last 20 trades, do you honestly think every one of them was chosen because it was the best trade or because it fit your emotions at the time? If that question hurts, good. It means you're waking up. It means you're finally seeing the real battle. And if you stay with me until the end of this audiobook, you're going to build something powerful. A mindset that doesn't flinch during volatility, doesn't crumble after losses, doesn't explode into overconfidence after wins, and doesn't fall for the emotional tricks your brain plays on you. We're just beginning the journey. And this journey isn't about learning more, it's about seeing more. Because in the next chapter, you're about to uncover something that almost feels unfair. The neuroscience behind bias. How your brain actually lies to you, why it pushes you towards bad decisions, and why those instincts were perfect for survival, but disastrous for trading.
You're about to see the wiring behind the impulses. You're about to learn how your brain truly works in the heat of the market. And once you see it, you can't unsee it. So take a breath, settle in, you're exactly where you need to be. Let's step into Chapter 2 and expose the machinery inside your mind.
Listen carefully, because in the next few minutes, you're going to learn something most traders never hear, something that quietly controls their decisions every single day. And once you understand this, you'll stop blaming yourself for lack of discipline and start seeing the real enemy clearly. Let me hit you with a question right away. Comment below. When was the last time you ignored your plan because the trade just felt right? Not because the setup was perfect, but because your gut was loud and logic was quiet. If that's ever happened to you, welcome to the science of bias. Here's the promise of this chapter. Listen all the way through and you'll understand why your brain keeps pulling you into bad trades even when you know better. Not because you're weak, not because you're undisciplined, but because your brain is doing exactly what it evolved to do. And that's the problem. Your brain was not built for trading. It was built for survival. Thousands of years ago, your brain had one job: keep you alive, avoid danger, chase rewards, react fast, think later. The market, on the other hand, rewards the opposite: patience, delay, probability, doing nothing when your instincts are screaming to do something. That conflict is the inner war. Let's start with cognitive shortcuts. Your brain hates uncertainty. It wants fast answers, so it fills in the gaps with shortcuts called heuristics. These shortcuts work great when you're crossing the street. They work terribly when you're managing risk. You see a pattern once, and your brain says, "I've seen this before." You see a green candle, and your brain says, "This is starting." You see a loss, and your brain says, "Fix it now." That's not intelligence, that's automation. Now let's talk about loss aversion, one of the most destructive forces in trading. Neuroscience shows that losses hurt about twice as much as gains feel good. Your brain literally experiences pain when you lose money. Real, measurable pain. That's why you hold losers and cut winners. That's why you move stops. That's why a small red number feels unbearable. Your brain would rather avoid pain than follow logic, even if avoiding pain guarantees long-term failure. Ever notice how a winning trade makes you feel light, confident, sharp? And a losing trade makes everything heavy. That's not the market, that's chemistry. Now comes confirmation bias. This one's sneaky. Confirmation bias is when your brain looks for evidence that agrees with what you already believe and ignores everything else. You go long, and suddenly every bullish tweet makes sense. Every red flag becomes noise. Every opposing view feels stupid. Here's something most traders don't know. Paul Tudor Jones forces himself to listen to people who disagree with him, not because it feels good, because it protects him from himself. He understood something critical. Your brain is a brilliant lawyer, not an honest judge. It will defend bad decisions with incredible skill. Recency bias makes it worse. Your brain gives more weight to what just happened than to long-term data. One big win, and suddenly you feel unstoppable. One big loss, and suddenly every setup looks dangerous. You start trading your last trade instead of your system. Then there's optimism bias and survivorship bias. You see the winners, you hear the success stories. You don't see the thousands who blew up doing the same thing. Your brain says if it worked for them, it'll work for me. What it doesn't say is at what risk, at what cost, with what probability. So let me ask you a fact-based question. Why do most traders fail even though information has never been more available? The answer is this: because information doesn't fix biology, and markets exploit biology ruthlessly. The market doesn't move against you personally, but your brain takes it personally every single time. That's the lie. The truth is this: every bad trade you regret wasn't a mistake of knowledge, it was a reaction. A reaction to fear, a reaction to greed, a reaction to pain, a reaction to pleasure.
And until you learn how those reactions are wired, discipline will always feel like a fight. But here's the good news. Once you see the machinery behind the impulse, it loses power. Awareness is the first crack in the armor of bias. You're not broken, you're human. And in the next chapter, we're going to do something powerful. We're going to rewire how you react to wins and losses. We're going to talk about dopamine, emotional attachment, overconfidence, hesitation, and the exact techniques elite traders and athletes use to reset their nervous system in real time. Because understanding the lie is only step one. Learning how to stay calm inside it, that's where fearlessness is born. Stay with me. The fearless mind is next. Listen in, because the next few minutes might be the difference between staying stuck in emotional cycles and finally breaking free from them. Here's the promise of this chapter. If you stay with me until the end, you'll understand why wins make you reckless, why losses make you freeze, and how to reset your mind so every trade stands on its own. This is the same mental science used by elite athletes, special forces, and institutional traders who operate under pressure without cracking. Let me ask you something right out of the gate. Comment below. When was the last time a winning trade made you feel untouchable and then the next trade humbled you fast? Or maybe it went the other way. One loss and suddenly every setup felt dangerous. That swing you feel? That's not weakness, that's chemistry. Your brain runs on dopamine. Dopamine isn't the reward chemical like most people think, it's the anticipation chemical. Every time you enter a trade, your brain starts projecting the future. It imagines profit, it imagines relief, it imagines being right. And when the trade wins, dopamine spikes. You feel sharp, confident, almost invincible. Your brain says, do that again. That's where post-win overconfidence is born. You increase size, you loosen rules, you trade faster. Not because you decided to, but because your brain got rewarded for risk. Now flip it. A loss hits and dopamine drops. Your body tightens, your breathing changes, your brain says, avoid this. That's post-loss hesitation. You see a clean setup and skip it. You hesitate on entry, you doubt your system. Here's something most traders never realize. The market didn't change after your last trade, your nervous system did. And then there's emotional attachment to past trades. This is where things get sticky. Your brain doesn't like unfinished business, so it carries emotional residue forward. A loss lingers, a win echoes. You start trading the past instead of the present. Let me ask you a fact-based question. Why do traders with great strategies still sabotage themselves? Because no strategy includes a reset. Elite performers reset constantly. A Navy SEAL doesn't carry the last mission into the next one. A professional quarterback doesn't replay the last interception before the next snap. They clear the slate. So, let me show you how traders do it. First, the emotional reset ritual. This is simple but powerful. After every trade, win or lose, you physically change state. Stand up, move your body, break the posture. This tells your nervous system that moment is over. Next, the breathing protocol. Slow, controlled breathing activates the part of your brain responsible for logic and restraint. 4 seconds in through the nose, 6 seconds out through the mouth. Do that a few times. You're not calming down, you're switching systems. Now comes the mental neutrality framework. Before the next trade, ask yourself one question. If I had no open position and no memory of the last trade, would I take this setup? If the answer is no, you wait. If the answer is yes, you execute, without emotion, without attachment. This is how fearless trading actually works, not by removing emotion, but by removing emotion from the decision. Here's something you may have never heard before. Fearlessness isn't confidence. Fearlessness is neutrality. Confidence depends on outcomes. Neutrality depends on process. And process never panics. By the end of this chapter, you should see it clearly. Wins don't make you better. Losses don't make you worse. Only reactions make you inconsistent. So here's your final question. What would your trading look like if every trade felt emotionally equal? Because that's the state professionals operate from. And in the next chapter, we're stepping fully into the professional trader's lens. You'll learn how elite traders think in probabilities, detach their identity from the market, and eliminate bias before a trade is ever placed. We're moving from emotional mastery into professional execution. Stay with me. This is where traders stop reacting and start thinking like pros.
Stay locked in, because what you're about to hear is the shift that separates emotional traders from professionals who survive decades in the market. Here's the promise of this chapter. If you listen all the way through, you'll learn how elite traders eliminate bias before they ever place a trade, not by trying harder, not by trusting instincts, but by changing how they see the market and how they see themselves inside it. Let me ask you something right away. Comment below. When was the last trade you took because you believed you were right, not because the data said so? Be honest. That moment right there is where bias lives. Professional traders don't trade opinions, they trade probabilities. That's the first lens shift. An amateur asks, where is the market going? A professional asks, what happens if I'm wrong? One question feeds ego, the other protects capital. Elite traders understand a truth that sounds simple but changes everything. No single trade matters. Not to your identity, not to your intelligence, not to your worth. The moment you tie your self-image to a trade, bias takes the wheel. George Soros built his career on this idea. He didn't look for certainty, he looked for imbalance. Soros believed markets reflect human behavior, not logic. And because human behavior changes, the market is always allowed to change. That's reflexivity. He constantly asked himself, what belief is the market currently pricing in, and what happens when that belief breaks? Notice something important. That question has no ego in it, no attachment, just observation. Now let's talk about Ray Dalio. Dalio built one of the most successful hedge funds in history by doing something most traders avoid like the plague. He aggressively challenged his own beliefs. He called it radical open-mindedness. If data contradicted his view, the data won, not his experience, not his reputation, not his past success. Here's a fact most traders never hear. The market doesn't reward intelligence, it rewards adaptability. And adaptability dies the moment you need to be right. So let me answer a fact-based question you may be wondering. Why do smart traders still blow up? Because they confuse being right with being profitable. Professionals don't need to be right, they need to be consistent. And consistency comes from detachment. Here's how detachment actually works. You stop saying, I am bullish. You start saying, my system has a long bias under these conditions. You stop saying, this trade should work. You start saying, this trade has a positive expectancy. Language matters, because language shapes identity, and identity fuels bias. Here's something you may never have heard before. The most dangerous word in trading isn't loss, it's I. I think, I feel, I know. Professionals remove themselves from the equation. They don't argue with the market. They don't defend trades. They don't explain losses. They execute, they record, they move on. So let me ask you this. What would change if every trade you took was treated like a business expense, not a personal judgment? Because that's how institutions think. They assume losses, they plan for them, they size for them. And that's exactly where we're headed next. In the next chapter, we're building the discipline engine that makes this mindset automatic. Rules-based systems, risk calculations, position sizing that protects you from yourself. Daily routines that eliminate emotion before it ever shows up. This is where psychology turns into structure. This is where clarity becomes consistency. Stay with me. We're about to lock this mindset into a system you can actually trade. Lock in, because this chapter is where everything stops being theory and starts becoming automatic. If you stay with me for the next few minutes, you'll learn how professionals build discipline so they don't have to rely on willpower, motivation, or emotions ever again. This is how traders stop self-sabotage even on their worst days. Let me ask you something right away. Comment below. When was the last time you broke your own rules even though you knew better? Not because you didn't know the rules, but because in that moment, discipline felt optional. Here's the truth nobody tells you. Discipline is not a personality trait. It's an environment. Professionals don't wake up disciplined. They build systems that make indiscipline expensive. This chapter is about building your discipline engine. Not motivation, not hype, structure. Let's start with the foundation. A rules-based trading system is not about predicting markets. It's about removing decision-making when emotions are loud. Your system should answer 3 questions clearly every time. When do I enter? When do I exit if I'm wrong? When do I exit if I'm right? If any of those are vague, bias sneaks in, and bias always shows up disguised as intuition. Here's a fact most traders never hear. The brain makes worse decisions the more choices it has. Professionals limit choices on purpose. Now let's talk about position sizing, because this is where discipline either lives or dies. You don't control outcomes, you control exposure. Elite traders think in R multiples. 1 R is the amount you're willing to lose on a trade, not what you hope to make, what you accept losing. When risk is defined, fear drops. When fear drops, execution improves. Here's another uncomfortable truth. Most emotional trading isn't caused by entries, it's caused by oversized positions. Your nervous system knows when you're risking too much, even if you don't admit it. That's where volatility-based sizing comes in. The market decides position size, not your ego. And risk of ruin? Professionals obsess over it. They don't ask, how much can I make? They ask, how long can I stay in the game? Survival first, growth second. Now let's move into daily routines, because discipline doesn't start at the chart, it starts before the screen even turns on. Professionals prepare the same way every day. Same time, same checklist, same mindset. Why? Because routine reduces emotional variability. And that leads us to the pre-trade checklist for bias-free execution. Before every trade, ask yourself these questions. Does this trade meet my system rules? Is my risk defined and acceptable? Am I reacting or executing? If you can't answer calmly, you don't trade. Here's something you may never have heard before. Discipline isn't about saying yes to good trades, it's about saying no to bad states. So let me answer a fact-based question you might be thinking. Why do disciplined traders still lose trades but stay confident? Because their confidence isn't tied to outcomes, it's tied to process integrity. They trust the engine. And once you have an engine, something interesting happens. You start noticing impulses before they turn into actions. You catch yourself before the click. That's where we're headed next. Because even with the best systems, the brain still looks for shortcuts. Overtrading, FOMO, revenge trades. In the next chapter, we're going straight into the biology of urgency. Why markets trigger cravings, why your body pushes you to act now, and how traders who were once on the edge of ruin broke the cycle for good. You've built the engine. Now we're going to stop the leaks. Stay with me. This is where discipline becomes unbreakable.
Listen closely, because if you stay with me for the next few minutes, you're going to learn how to shut down the exact impulse that causes overtrading, FOMO, and revenge trades before it hijacks your mouse, your phone, or your account. This chapter isn't about trying harder. It's about breaking the cycle at the biological level. Let me ask you something right out of the gate. Comment below. When was the last time you took a trade you knew you shouldn't, but you clicked anyway? Not because it fit your system, but because you felt late, wrong, bored, or angry. If that's ever happened to you, this chapter is for you. Here's the uncomfortable truth. Overtrading, FOMO, and revenge trading are not discipline problems. They are craving problems. Your brain doesn't want profits, it wants relief. When price starts moving fast, your nervous system lights up. Heart rate increases, breathing tightens, attention narrows. This is the survival brain waking up. Thousands of years ago, movement meant danger or opportunity. Hesitate and you die. Act fast and you survive. Markets exploit that wiring perfectly. That urge you feel when a candle explodes, that's not intuition, that's a neural craving state. Your brain is flooded with dopamine and adrenaline at the same time. Dopamine says, don't miss this. Adrenaline says, act now. Logic doesn't stand a chance. This is the biology of urgency, and once it's active, rules feel optional. That's why revenge trading feels so powerful after a loss. Your brain isn't trying to make money, it's trying to erase pain. Let me tell you about a trader I once coached. Smart guy, solid system, but after every losing trade, he felt an itch, a need to get it back. One day he said something that stuck with me. It feels like if I don't trade again, I'm letting the market win. That's not trading, that's identity under threat. And here's the fact-based answer to why this cycle is so hard to break. You cannot outthink a triggered nervous system. You have to interrupt it. That's where pattern interrupts come in. The first tool is the timeout rule. After any emotionally charged trade, win or loss, you step away. 5 minutes, 10 minutes, no charts. Not to punish yourself, to let chemistry settle. This is what professionals do instinctively. They don't stack emotional trades. Next comes dopamine fasting. This one sounds simple, but it's brutal in a good way. You stop chasing stimulation, no constant chart flipping, no social media hype, no refreshing P&L. When dopamine drops back to baseline, patience returns. Most traders don't lack skill, they're overstimulated. Now, let me give you the 3-question FOMO eliminator. This is a hard stop for impulsive trades. Before you click, ask yourself, does this trade exist in my plan? Would I take this trade if the last one didn't exist? Am I trying to make money or change how I feel? If you can't answer calmly, you don't trade. Here's something you may have never heard before. FOMO isn't fear of missing profit, it's fear of being irrelevant. The market moves without you, and your ego panics. Professionals don't compete with the market, they wait for permission from their rules. Let me answer one more fact-based question before we move on. Why do disciplined traders stop spirals early? Because they don't argue with impulses, they outlast them. They know urges peak and fade, they don't identify with the urge. And once you break the cycle a few times, something shifts. The urge loses authority. You start feeling space between impulse and action. That space is freedom. And in the next chapter, we're going to expand that space into a full framework. You'll learn how to activate the executive brain on demand, how to detach from money completely, how to trade purely from rules with a neutral mind. This is where emotion stops driving and structure takes the wheel. You've broken the cycle. Now it's time to become emotionless by design. Stay with me. The calm, unshakable trader is next.
Stay with me, because in the next few minutes, you're going to learn how elite traders shut off emotional noise and operate from a calm, almost unfair level of consistency. This is the chapter where reaction ends and execution begins. Here's the promise. If you listen all the way through, you'll understand how to trade without fear, without attachment to money, and without needing confidence. You'll learn how professionals stay steady when chaos hits, and why emotionless doesn't mean careless, it means controlled. Let me ask you something right away. Comment below, when was the last trade you took that felt personal? Not strategic, not procedural, personal. That feeling right there is what we're dismantling. First, let's clear something up. Emotionless trading does not mean you feel nothing. It means emotion never touches the decision. Professionals still feel stress. They still feel excitement. They just don't let those feelings drive the wheel. And that starts with activating the right part of the brain.
This is what we'll call the executive brain activation method. Your brain has two systems. One reacts fast and emotionally. The other thinks slow and strategically. Fearless traders learn how to switch control on demand. Here's how it works. Before any trade, you slow the body to speed up the mind. Longer exhales, relaxed jaw, soft focus on the screen. This physical shift signals safety, and safety unlocks the executive brain. Once that system is online, impulse loses strength. Now comes the hardest part for most traders, detaching from money. Money is emotional because we give it meaning, security, status, freedom, self-worth. Professionals strip that meaning away. They don't see dollars, they see units of risk. One trade is not rent money. It's not validation. It's not proof. It's a data point. Here's a fact most traders never hear. The fastest way to lose emotional control is to watch P&L instead of process. Emotionless traders focus on execution quality, not outcomes. They ask one question after a trade: did I follow my rules? If yes, the trade was a success, even if it lost. Now let's talk about trading purely from rules. Rules are emotional armor. When rules are clear, there's nothing to debate, no inner argument, no second guessing. You either have a signal or you don't. This is why professionals don't improvise. Improvisation feels smart, but it invites bias. Rules remove personality from trading, and that leads us to the neutral mind protocol. This is the mental state where every trade feels the same. No excitement, no dread, just execution. Here's how it works. Before entry, you mentally rehearse 3 outcomes: win, loss, scratch. You accept all 3. Once accepted, fear disappears. Here's something you may never have heard before. Fear doesn't come from losing. It comes from resisting the possibility of losing. Neutrality comes from acceptance. Let me answer a fact-based question you might be thinking. Why do some traders look calm even after big losses? Because they already paid the loss mentally before clicking buy or sell. They don't experience shock, they experience confirmation. So let me ask you this. What would your trading look like if no single trade could emotionally move you? Because that's not talent, that's training. And now that you've built emotional neutrality, something powerful happens. The market slows down. Clarity increases. Noise fades. Which brings us exactly where we're headed next. In the next chapter, we'll talk about mastering clarity under pressure, how to think like a chess player instead of a gambler, how to see uncertainty as structure, not threat, and how to use mental stop losses to protect your focus the same way you protect capital. You've learned how to become emotionless. Next, you'll learn how to see clearly when everyone else is overwhelmed. Stay with me. This is where calm turns into precision.
Stay locked in, because this chapter is about one thing: clarity. Not confidence, not prediction, clarity. Here's the promise. In the next few minutes, you'll learn how to stay calm when the market looks insane, how to turn uncertainty into structure, and how professional traders see opportunity where most people feel threat. By the end, you'll understand a mental technique almost no retail trader is ever taught. And once you hear it, you'll never look at chaos the same way again. Let me ask you something, Hurley. Comment below, when was the last time the market felt too fast for you? Not risky, not volatile, fast. That feeling is the absence of clarity. Most traders don't lose because they're wrong. They lose because their mind gets noisy. Price moves, headlines flash, candles expand, and suddenly thinking collapses. Elite traders train for this exact moment. The first shift is learning how to interpret uncertainty. Uncertainty is not danger, it's information that hasn't been organized yet. Amateurs see uncertainty and freeze or force a trade. Professionals see uncertainty and zoom out. They ask a better question: what is the market not deciding yet? Because when the market is unclear, doing nothing is a position. This is where thinking like a chess player changes everything. In chess, you don't react to one move, you evaluate the board. You look at structure, imbalance, and timing. Traders who think like chess players stop obsessing over single candles. They focus on zones, probabilities, and sequences.
They know every move doesn't require action. Sometimes the best move is patience. Now here's a truth most people miss. The market is not attacking you. Price is not personal. The moment you feel threatened, your survival brain takes over. And once that happens, clarity is gone. Professionals reframe the market as probabilities, not threats. No outcome is good or bad, it's simply one of many expected outcomes. This is how they stay calm during volatility. They don't ask, "What if I'm wrong?" They ask, "What's the probability distribution?" Here's a fact-based question. Why do some traders stay composed during massive drawdowns? Because they never emotionally exposed themselves in the first place. Which brings us to one of the most powerful tools you'll ever learn: the mental stop loss. Most traders only stop risk financially. Elite traders stop risk emotionally. A mental stop loss is a pre-decided emotional boundary. It's where you disengage attention, not capital. For example, if price hits a certain level, you don't just exit the trade, you exit the thought loop. No chart watching, no revenge planning, no internal debate. You walk away. Here's something almost nobody talks about. Your biggest losses don't come from bad entries. They come from staying mentally connected after your edge is gone. Mental stop losses protect your focus, and focus is capital. Let me answer another question you might be asking. How do traders build deep confidence without certainty? Because confidence doesn't come from knowing what will happen. It comes from knowing how you'll respond no matter what happens. That's clarity. And once clarity becomes your default, something shifts inside you. You stop feeling like a gambler reacting to markets, and you start feeling like an operator executing a plan, which sets the stage for the final transformation. In the next chapter, we're going deeper than strategy. We're talking identity. How to stop seeing yourself as an emotional trader. How to adopt institutional-level discipline. How to break free from small money thinking and step into a fearless trader persona. Clarity changes how you trade. Identity changes who you are when you trade. And that's where real consistency is born. Stay with me. The next chapter is where the trader you've been gets replaced by the trader you're becoming.
This is where everything changes. Listen closely, because in the next few minutes, you'll learn why most traders never become fearless and exactly how a small group completely rebuilds who they are in the market. Not their strategy, their identity. By the end of this chapter, you'll understand a shift so subtle, so powerful, that once it clicks, you can't unsee it. Here's a question for you, and be honest. Comment below, when was the last trade you made because you felt something instead of seeing something? That answer tells you which identity is currently driving your trading. Most traders think their problem is discipline. It's not. The real issue is identity. If you see yourself as an emotional participant, you'll act emotionally. If you see yourself as an analytical operator, you'll behave like one. High-performance traders don't try to be disciplined. They are disciplined because discipline is who they are. This is the move from emotional identity to analytical identity. Emotional identity asks, how do I feel about this trade? Analytical identity asks, does this meet my criteria? No drama, no ego, no attachment, just execution. This is why institutional traders feel so cold to the outside world. They're not cold, they're clear. Now let's talk about institutional-level discipline, because this is where most people get it wrong. Institutions don't rely on motivation, they rely on structure. Rules are not optional, they are non-negotiable. When a hedge fund trader breaks protocol, it's not called being human, it's called a violation. That mindset alone changes behavior. Here's a real example. Paul Tudor Jones once said the most important rule of trading is playing great defense, not offense, defense. That's identity talking. He didn't see himself as someone trying to win big. He saw himself as someone whose job was to survive long enough for probabilities to work. Now let's address something uncomfortable:
middle-class money psychology. This isn't about income, it's about conditioning. Middle-class money thinking is emotional, reactive, and outcome-obsessed. It says things like, I need this trade to work. I can't miss this move. I have to make it back. High-performance traders delete those sentences from their internal language. They don't need trades. They don't chase moves. They don't negotiate with losses. They think in series, not moments. One trade means nothing. 1 week means nothing. Only the process matters. Here's a fact-based question. Why do elite traders survive drawdowns that wipe others out? Because their identity is not tied to being right. They don't need the market to validate them. George Soros famously said that it's not whether you're right or wrong that matters, but how much money you make when you're right and how much you lose when you're wrong. That's not a strategy quote. That's an identity statement. Fearless traders don't feel fearless. They operate fearlessly. They show up the same after a win. They show up the same after a loss. No spike, no collapse, just consistency. Now here's the thing you were promised earlier, something almost no one tells traders. Your results will never outperform your self-image. You will always trade in alignment with who you believe you are. Change the identity and behavior follows automatically. This is how traders rebuild themselves. They stop saying, I'm trying to be disciplined, and start saying, I don't take trades that don't meet my rules. They stop hoping. They start executing. They stop surviving the market. They start operating within it. And when that identity locks in, something quiet but powerful happens. Fear loses its grip, not because risk disappears, but because confusion does. And that brings us to the final moment. The next chapter is not education, it's activation, a cinematic close, a decision point, where everything you've learned stops being information and becomes a way of life. The beginning of your new trading identity starts there. Stay with me. You didn't come this far to think like the old version of yourself ever again.
This is not the end. This is the line in the sand. Listen carefully, because what you're about to hear isn't motivation, it's direction. In the next few minutes, you'll lock in the one truth that separates traders who drift forever from traders who actually transform. And if you catch it, really catch it, you'll never approach the market the same way again. Here's a question for you. Comment below. If you had to describe the trader you are becoming in one word, what would it be? Because identity is no longer optional for you. You've seen the patterns, you've learned how the brain lies, you've rebuilt discipline, you've broken impulsive cycles, you've stepped into clarity, you've shifted who you are in the market. Now comes the part most people avoid: repetition. Mastery is not information. Mastery is not intelligence. Mastery is not even talent. Mastery is doing the same right thing when no one is watching, when emotions are loud, and when the outcome is uncertain. Fearless traders aren't fearless because they know more. They're fearless because they've trained their nervous system to trust the process. They don't wake up hoping today is different. They wake up knowing exactly who they are. A disciplined operator, a probability thinker, a professional executor. Think about this for a second. Every legendary trader you admire didn't win because of one big moment. They won because they showed up the same way thousands of times. Same rules, same risk, same calm. And here's the truth most people never hear. You don't rise to your goals, you fall to your standards. The standards you build now decide the trader you become later. So let this be your reset point. From this moment forward, you don't trade to feel something, you trade to execute something. You don't chase the market, you let probabilities come to you. You don't fight losses, you respect them. You don't celebrate wins emotionally, you log them professionally. This is what fearlessness actually looks like: quiet, grounded, unshakable. Now here's your final challenge. Ask yourself tonight, before your next session, what would the disciplined version of me do here? Then do exactly that.
And if this audiobook helped you see trading differently, if it shifted how you think, how you feel, how you execute, then stay connected. Subscribe to Psych Rich, not for hype, not for signals, but for continued transformation. Because this isn't about one audiobook, it's about building a mind that can handle pressure, uncertainty, and opportunity without breaking. Your new trading life doesn't start tomorrow, it starts now. Step into it.